Welcome back to The Explainer. Today, we're diving straight into something really wild. How a single, scrappy startup back in 1994 literally wrote the exact financial playbook for today's massive AI boom. If you've ever found yourself wondering how we went from traditional, slow and steady businesses to tech startups snagging multi-billion-dollar valuations overnight, well, the answer is right here. Let's get into it.
Okay, let's dive into this. Picture early 1994. Humanity had actually already built the nervous system of an alternate reality. But the network was essentially a dark room. The physical infrastructure, it was incredibly robust. You had giants like Intel and Cisco laying down these global routing pipelines and microprocessors. But for an ordinary person, this global network was just a completely invisible, inaccessible wasteland. The nervous system was there, for sure, but we totally lacked the interface to actually see it or interact with it.
I mean, think about it. Interfacing with the internet, back then, meant being locked in this closed vault of academic isolation. You had to type these cryptic Unix commands and command line scripts just to move simple text files around. It was incredibly isolating. But then, Marc Andreessen, who was just a 22-year-old computer science grad at the time, and hyper-ambitious billionaire Jim Clark stepped in. They engineered a totally open frontier. They realized, hey, the internet needs a sovereign visual window to actually project its light to the public.
And to build that window, they didn't just tweak the traditional corporate playbook, they totally bypassed it. Usually, East Coast venture sourcing meant vetting mature executives in stuffy boardrooms, focusing on, hard manufacturing plants. But Clark and Andreessen, they executed a midnight hotel raid in Champaign, Illinois in April 1994. Literally, they gathered the original raw student programmers of the primitive NCSA Mosaic browser inside a local hotel lobby, typed up offer letters right there on the spot, and flew these hackers out to California. They traded mature corporate strategy for pure, high-velocity software logic.
So they set up shop in a rented Mountain View office and adopted an internal code name that you'll definitely recognize today: Mozilla. Yep, a mashup of Mosaic Killer and Godzilla. And this wasn't just some fun, quirky name. It was a hardcore internal mandate. They even drew a giant green lizard on their walls to symbolize their intent to just absolutely crush the competition. The team's high-velocity mission was wild. Throw out every single line of old code so they wouldn't get sued over patents, rewrite the entire browser from scratch, and ship a commercial-grade product before the industrial establishment even knew what hit them.
And this brilliantly illustrates how they actually pulled it off. Remember, back then, people were dealing with agonizing 14.4 kilobit per second dial-up modems. Old browsers would just freeze on a blank screen for minutes, waiting for a single image to download. It was brutal. Netscape solved this friction with Step 1, progressive image rendering. Text loaded instantly, while images started out as these blurry templates that sharpened over time. Step 2, they built a multi-platform source core, so the browser worked uniformly across Windows, Mac, and Unix. And Step 3, this is absolutely crucial. Engineer Lou Montulli introduced cookies, and the team engineered SSL encryption. SSL allowed secure credit card routing, which literally converted the web into a secure commercial space. Game changer.
Now, to get this tech into everyone's hands, Andreessen executed a strategy that absolutely horrified traditional business minds. They distributed the browser free for non-commercial use, just uploading it directly to public servers. No shrink-wrapped boxes, no retail price. And the result? Well, in less than 4 months of release, Netscape captured a staggering 90% monopoly share of the global web browser market. 90%! They instantly became the primary window into human digital consciousness.
But by the summer of 1995, they found themselves in this massive existential paradox. On one hand, they had absolute market dominance, a massive global infrastructure footprint, and an immense engineering talent pool. But on the other hand, their strategy of giving the consumer browser away for free meant they were hemorrhaging cash. I mean, they had zero net profits and a negative 28% EBITDA margin. Wall Street investment bankers took one look at that and initially balked at taking them public. No history of quarterly profits? To traditional finance, that was a huge red flag.
But this is where the entire global economy shifts. Jim Clark and venture capitalist John Doerr completely shattered those old financial metrics. Under traditional Wall Street standards, you needed asset-backed cash flows and net quarterly profits. Clark and Doerr, however, introduced the Netscape speculative inversion. They basically insisted, look, in this new digital economy, lagging cash flows don't matter. The real assets were user velocity, technological leadership, and future speculative monopoly scale. They convinced the market to place a massive bet on pure exponential expectation.
So on the morning of August 9, 1995, they list the company. The initial conservative underwriter price for the stock,
Just 14 bucks.
But the second the opening bell rings, that price completely slips the control of the market makers. An insatiable wave of global institutional demand just rips the stock open at an astonishing $71 on the very first trade. And by the time the closing bell rings on that single 8-hour trading session, this 16-month-old startup with literally zero net income closes with a staggering $2.9 billion valuation. Mark Andreessen, who was basically an impoverished student just 24 months prior, is suddenly a multimillionaire on the cover of Time magazine. It was unreal. So the crucial point is this exact moment shattered the financial consciousness of the globe. This single day signaled to Wall Street that you could invent abstract software logic, build a massive free user base overnight, and extract multi-billion-dollar fortunes from pure expectation. And just like that, this speculative inversion triggered the dot-com bubble, the greatest financial speculative mania in human history. What followed was a savage, totally chaotic aftermath governed by a brand new mandate: get big fast. Venture capitalists stopped looking for stable, boring business plans. Instead, they backed virtually any company with a .com at the end of its name, fueling a massive land grab. Investors willingly accepted catastrophic cash burn rates. We're talking sometimes $50 million a month, just on the gamble that reaching exponential network monopolies would eventually pay off. Traditional valuation completely degenerated into bizarre new metrics like advertising presence, eyeballs, and page views. You can see the result right here. Between 1995 and March 2000, the NASDAQ Composite Index saw a massive, eye-popping 573% run-up. Trillions of dollars were drawn out of traditional manufacturing and energy, pouring straight into the digital frontier. Now, yeah, obviously the bubble eventually burst, but this manic capital influx actually achieved something historic. It provided the massive, low-cost capital required to physically lay down millions of miles of fiber optic cables. And that physical groundwork became the crucial foundation for the survivors of the crash, giants like Amazon, eBay, and Yahoo. Meanwhile, Netscape itself was facing a massive existential threat from Microsoft, who weaponized their operating system monopoly by just bundling Internet Explorer for free. Defeated commercially, Netscape executed one final brilliant maneuver in 1998. They open-sourced their code. This launched the Mozilla Open Source Project and eventually Firefox, effectively creating the architectural baseline for the modern, open web standards that still power the software industry today.
Now let's move forward and see how this builds a continuum straight into our modern world. The historical trajectory from that 1995 Netscape IPO connects directly to the internet platform age of Google and AWS, right through the mobile and custom software boom of the 2010s, all the way to what the source calls Phase 7, cognitive systems, which is today's artificial intelligence. Sure, the aesthetics have changed from 8-bit text to deep learning transformers, but the underlying financial relationship between tech breakthroughs and speculative hype, it is completely unbroken.
Let's connect these dots directly. The 1995 Netscape speculative matrix valued user growth over legacy profit. Today, we are staring at the exact same AI speculative mirror. When modern AI startups like OpenAI or Anthropic raise massive capital at multi-billion-dollar valuations with huge operational losses and zero near-term profitability, they are literally executing the exact same financial operating system that Netscape codified. Venture capitalists are calculating that token scale, model leadership, and achieving a cognitive platform monopoly will vastly outscale any short-term cash flow concerns.
And crazy enough, even the geography has come full circle. While the mobile app era migrated down to the sprawling suburban campuses of the South Bay, Phase 7 AI has returned to hyper-dense urban network environments. AI founders are demanding that same late-night physical proximity, settling right into San Francisco's Mission District and Potrero Hill, which folks are now calling Area 27 or Cerebral Valley. This intense face-to-face cross-pollination directly mirrors the frantic energy inside that Mountain View office right before the Netscape Big Bang.
So, what should you really take away from all this? It's the endurance of the inversion. Netscape Communications might not exist as an independent company anymore, but its legacy is absolutely the dominant engine of global capitalism today. Netscape broke the ancient tyranny of historical accounting. It proved that immense power could be generated from pure intellectual abstraction and the relentless serialization of public expectations. Basically, they taught humanity how to use global finance to back completely unproven frontiers and literally construct physical reality out of pure expectation.
Which leaves us with this provocative thought on our final slide. As we sit here watching billions of dollars pour into artificial intelligence, we have to ask, Is the software code compiling tonight in the AI hacker houses of San Francisco merely traveling down the exact speculative highway that Netscape paved back in 1995? Are we watching a brand new revolution unfold, or is this just one long, continuous replay of that original Big Bang? Thank you so much for joining me on this explainer. Keep asking those big questions, and I'll catch you next time.